Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of corporate mumbo jumbo. Today we are diving into a Form 8K filing, which is basically a company shouting, hey, something important just happened. And we're here to figure out if that something is a big deal or just corporate noise. This particular company seems to be betting on having more pieces of the pie. Let's see what's cooking. This report is from the Cannaisseur group, and the big news is dated March 21, 2025. Think of the date as when the company officially raised its hand and said, we have something to tell you. The filing itself is called a current report. Basically, it's used when some unusual events happened. The Cannaisseur Group Inc., that's the company we will be looking at. They are incorporated in Delaware, which is a popular choice for companies. Their main office is in Atlanta, Georgia. This doesn't really impact what they do, but it's always good to know where they are based. This part is just some legal checkboxes and doesn't affect the important details, so we'll skip past it. Okay, this is a bit more interesting. They have common stock and it trades under the symbol TCRG on the OTC Pink market. This is a less formal stock exchange. It looks like Cannaisseur Group considers itself an emerging growth company. This means they are a smaller company that gets some breaks on certain regulations. It doesn't automatically mean they are a great investment. Here's the heart of the matter. The company issued a press release saying they've changed their articles of incorporation. Basically, they are changing their internal company rules to create more stock. Specifically, they are increasing the number of shares they are allowed to issue from 100 million to 500 million. That's a huge jump. There's an exhibit attached, Exhibit 99-1, which is a copy of the press release. We'll get to the implications of this change in a bit. Okay, let's dive into the press release itself to get more details. Press releases are often designed to make a company sound good, so we always need to read them with a critical eye. Now, what does this all mean? Well, increasing the authorized shares gives the company a lot more flexibility. They can issue more stock to raise money, acquire other companies, or compensate employees. However, it also means existing shareholders' ownership gets diluted. Imagine a pizza cut into 10 slices and you own one. If suddenly the pizza is cut into 50 slices, your one slice is a much smaller percentage of the whole pizza. That's what happens when a company issues more shares. It's similar to inflation, but instead of inflating prices, they are inflating stocks. Another issue is, why do they need so much more stock? Is it because they are planning a huge acquisition or because they are running out of cash and need to sell more stock to stay afloat? The press release probably won't tell us the real reason. So what's the takeaway here? Cannaisseur Group has made a big move that could have significant consequences for shareholders. It gives them a lot more flexibility, but it also dilutes existing ownership. As an investor, I'd want to know why they are doing this before making any decisions about buying or selling the stock. Now, looking at this report more broadly, Cannaisseur Group has introduced a notable risk for shareholders by vastly increasing the number of authorized shares. While this move provides financial flexibility, it could dilute the value of existing shares. Whether this is a good thing for Cannaisseur or not depends on why exactly they want more shares. The answer to that question will determine what will happen to the company in the future. Thanks for watching. If you found this breakdown helpful, give us a like, drop a comment, and subscribe for more Corporate Decoder videos.